issues in banking. 14.11 Types of loans, based on interest rate table 1. Type of loans based on lending rates: fixed interest loan, floating interest loan, e.g. short-term crop loans up to 3 Indian rupees lakh for farmers at fixed interest 7%. This interest rate will not be changed throughout the loan tenure. E.g. external benchmark, plus spread plus risk premium equals 12% originally. Ref #1A2 Mon policy. But benchmark is regularly updated. So resultant interest rate may increase or decrease throughout the tenure of loan. Teaser loan, a subtype of floating interest rate loan, wherein initial years have low interest, but afterwards higher interest rate. While RBI has not banned teaser loans, but has put stricter regulations on them from 2011. 14.12 Types of loans, based on borrowers table 2. Type of borrowers: prime borrower, he has the capacity to repay loans. Subprime borrower, individual. Such person doesn't have the capacity to repay loan. Giving teaser rate home loans to them caused subprime crisis in USA, 2007 to 2008, ultimately led to global financial crisis, GFC. More in pillar #3. Overleveraged borrower, company. Such company has borrowed too much money than its ability to pay it back. An overleveraged company has high ratio of debt, bonds or loans, to equity, shares. Zombie lending, when a weak bank keeps giving new loans to a subprime, overleveraged borrower. Black ? Ornament. Why is the offering of teaser loans by commercial banks a cause of economic concern? Pre-2011, 1. The teaser loans are considered to be an aspect of subprime lending and banks may be exposed to the risk of defaulters in future. 2. In India, the teaser loans are mostly given to inexperienced entrepreneurs to set up manufacturing or export units. Answer codes: A, 1 only, B, 2 only, C, both 1 and 2, D, neither 1 or 14.13.1 NPA, TBS problem, 3 stages of 1. Till mid-2000s, boom period in global economy. Indian corporates were taking large amount of loans and became overleveraged. 2. From 2007 to 2008, subprime and global financial crisis, GFC, Indian exports, black down pointing double triangle. UPA gov's policy paralysis and judicial activism, environment activism, projects delayed. Companies began facing difficulties finishing projects and repaying loans. 3. By 2013, Tilde 1, 3 road of the bank loans were owned by IC1 companies, IA companies with interest coverage ratio less than 1, meaning they were not generating enough revenue even to repay the loan interest. IC1 is good and IC1 is bad. Thus, balance sheets of a 1, some large corporates companies, and 2, public sector banks, PSB, became weak. It is called twin balance sheet syndrome, TBS, by Economic Survey 2015 to 16. Black ? Ornament. What is the importance of interest coverage ratio of a firm in India? Prelims 2020, 1. It helps in understanding the present risk of a firm that a bank is going to give a loan to. 2. It helps in evaluating the emerging risk of a firm that a bank is going to give a loan to. Batch, PCB 7. 3. The higher a borrowing firm's level of ICR, the worse is its ability to service its debt. Answer code: A, 1 and 2 only, B, 2 only, C, 1 and 3 only, D, 1, 2 and 3. 14.13.2 NPA related definitions in banking sector. STD, assets loan account where borrower is repaying the principal and interest in timely fashion. Equals a SMA 0 if loan principal or interest unpaid for 1 to 30 days from its due date, then such loan account is classified as special mention account 0. SMA 131 to 60 days, SMA 261 to 90 days. Airplane NPA. If loan principal or interest is not paid for more than 90 days from its due date, then such loan account is classified as non-performing asset, NPA. 90. For farm loans, NPA is not counted on number of days, but on number of cropping seasons. S22, NPA as a percent of total loans, declined from 11%, 2017, to 7%, 2021 September, public sector banks, PSBs 2016-2020 equals losses. 2020 June onwards equals profits. Provisioning as per RBI norms, banks must set aside funds to cover losses against their NPA. Such provisioning of funds, black down pointing double triangle, decrease profitability of the bank. Gross NPA, GNPA. Gross non-performing assets equals grand total of all NPA loans. Indian commercial banks, gross, NPA approximate 8 Indian rupees lakh crores, within that PSB, 6 Indian rupees lakh CR, private sector banks, 2 lakh CR. Exact amount, 8.2 Indian rupees lakh crore, 2021 March. 8.8 Indian rupees lakh CR, 2020 March. Thus NPA black down pointing double triangle than last year because 1, better loan recoveries, 2, higher write-offs. Sectors with highest percent NPA equals 1, industries 2, agriculture, 3, service sector 4, personal loans, as of 2020. Net NPA equals GNPA minus provisioning raised hand WHATITMEANSNOTIMP substandard asset when loan account remains in the NPA classification for 12 months for 12, doubtful asset when loan account in substandard classification for 12 months. Loss asset when a bank, its auditor or RBI declares that given doubtful asset has little or no salvageable value. Loan write-off. Loan write-off equals banker removes a loan amount from the asset side of the bank balance sheet to save corporation tax. How? Equals we are not here for CA exam. Loan write-off doesn't waive banks' right to recover that bad loan, it's merely an accounting exercise for tax benefits. Batch, PC. Loan write-off black down pointing double triangle reduces the NPA percent of the bank because amount is written off or cancelled from balance sheet, 2020 to 21. Indian commercial banks written off 1.85 Indian rupees lakh crore worth loans restructured loan when principal or interest rate per tenure of the loan is modified. Banks may do it when borrower facing difficulty in repaying loans. Stressed asset NPA plus loans written off plus restructured loans equals stressed assets. OTS with haircut. For example, if bank allows the borrower to pay 60% of dues and forgoes 40% as loss, then bank has offered one-time settlement, OTS, with 40% haircut. Evergreening of loans when a borrower taking a new loan to pay off his old loan. 14.14 raised hand at Manaraba loan, EMI, a NPA relief, a moratorium IF a loan is outstanding as of then 2020 March. RBI allowed, optional, moratorium, suspension of loan repayment for 6 months for March, April, May, June, July, August. So, if a borrower's income black down pointing double triangle due to corona, he gets relief from equated monthly installments, EMIs, for X months. 6. It was not compulsory to skip EMI. Borrower may repay loan regularly if his financial situation was strong. Loan was not removed or waived. It was only temporarily suspended. Note, in last handout, I had kept a very big short note here discussing how some banks demanded compound interest rate for 6 months and matter went to SC, a Gov gave subsidy to those banks. But for 2023 exam cycle, all that microscopic details are outdated and faded and not grabbing headlines anymore. So I am deleting. 14.15 RBI, 3R Framework for Revitalizing Stressed Assets, 2015 to 19. 14.15.1 Heavy checkmark rectification. 2015, RBI ordered the banks to conduct asset quality review, AQR, and begin rectification of bad loans, i.e. bank doesn't change in loan interest, tenure or terms, but asks client to rectify his irregularity in loan repayment. In genuine case, additional loan may be given. Bank may also try to find a new partner, investor for reviving the project. 14.15.2 Peak restructuring. Restructuring equals changing the loan interest, percent, or tenure or ownership. It consisted of following schemes. Batch, PCB7, Mrunal 5/25 for infrastructure loans. RBI allowed banks to extend infra loan tenure up to 25 years, and even black down pointing double triangle loan interest rate. But such interest rate will be reviewed each 5 years, e.g. airport, power plant, highway project etc. KE loans. Commander, SDR, S4A schemes for non-infrastructure loans. What was their full form? How did they work? ANS, not important, outdated current. Figure 1, 2019 14.15.3 Recovery. A bank liquidates loan defaulters' assets under either of the following acts. 1. Sufisi Act 2002, OR2, Insolvency and Bankruptcy Code 2016, 2016. Black question mark ornament scheme for sustainable structuring of stressed assets, S4A, is related to Prelim 2017, A. Procedure for ecological costs of developmental schemes. B. Scheme of RBI for reworking the financial structure of big corporates with genuine difficulties. C. Disinvestment plan for central public sector undertakings. D. Provision in the Insolvency and Bankruptcy Code. 14.15.4 RBI's Prudential Framework, 2019. This is outdated topic, but only basic idea required. 2019. RBI released Prudential Framework for Resolution of Stressed Assets Directions 2019. 1. It discontinued Commander, S4A, SDR, etc. Now IBC to be main tool for resolving business loans. 2. Lenders must upload data of 5 Indian rupees crore or loans to RBI's Krilk portal on weekly basis. 3. Forbids loan restructuring for borrowers who have committed frauds or willful default in past. Raised hand. Most of above directives suspended, postponed in Corona, so don't lose sleep. 14.15.5 RBI's KV Cometh Report Resolution Framework for Corona-related stress. 2020, RBI had set up this committee to look into loan restructuring for large companies who are hit by corona pandemic. KV Cometh identified 26 vulnerable sectors, e.g. power, construction, steel, road, cement, etc. He and gave various technical guidelines for loan restructuring. 14.15.6 Resolution Framework 1.0 and 2.0, 2020 to 21, based on the recommendations of the aforementioned KV Cometh Committee, RBI issued a set of guidelines for bank NBFCs for dealing with the bad loans. Resolution framework applicable to borrowers who are 1.0 large companies, 2.0 individual persons, and small companies. What exactly is written in above frameworks? ANS 1. Giving extra loans to genuine cases. 2. Extending the loan tenure. 3. Reducing loan interest rate, etc. Will not PhD. Hashtag 14.16 Scale Safisi Act 2002, Origin, Objective, and Limitations 1991. Now High Committee on Banking Sector Reforms observed that borrowers obtain stay orders from ordinary courts equals banks have difficulty recovering NPA. So, debt recovery tribunals, DRT, were set up 1993 equals ordinary courts can't interfere in the loan recovery process. 1998, High Committee observed that DRTs need to be strengthened with the law, so, securitization and reconstruction of financial assets and enforcement of security interest Safisi Act enacted in 2002. 2002. Under Safisi Act, lenders can attach the mortgaged assets when loan is not repaid. They can change board of directors in such companies, can auction such assets, can also sell such assets to asset reconstruction companies, ARC, NBFC. 2021, RBI set up Sudarshan Sen Committee to suggest reforms for ARCs Safisi not applicable on farm loans. If loan defaulter wants to obtain a stay order, he cannot go to ordinary courts. He will have to approach for DRT. If DRT doesn't help, then hire appeal to Debt Recovery Appellate Tribunal, DRAT. But DRAT will require him to deposit minimum 50% of the loan dues to discourage frivolous appeals. Hire appeal to High Court. 14.16.1 Scales which lenders have Safisi powers. All types of banks, housing finance companies, HFCs, if an NBFC fulfills two conditions simultaneously. 01. The NBFC having asset size of 100 crore Indian rupees or more. And 02. Loan given is at least 50 Indian rupees lakhs. Budget 2021 reduced minimum limit to 20 Indian rupees lakh, for example Bajaj Finserv, Reliance Capital, Mudhoot Finance, Illinois and FS. 14.16.2 Scales SC Judgment, yes, cooperative banks also have Safisi powers, 2020, Constitution, 7th Schedule Union List, 7. The DRTs and DRATs are understaffed. 1 lakh plus cases pending, 2016, so, case will go on for years, borrower remained in possession of asset. This leads to erosion of asset value, machinery, vehicles, even when DRT allows auction at a later time. In some businesses, auction or liquidation may not yield the best returns for the banks, e.g. hotel resort in remote area, where no other hoteliers are keen to invest. In such cases, if the loans were restructured, i.e. reducing percent interest rate, extending tenure, finding new partners, then banks could, but not including cooperative societies. Entry 45. But, Safisi Act doesn't facilitate such arbitration, so, Gov. came up with a new law, IBC. Fourteen point 17 Scales Insolvency and Bankruptcy, I&B, Code 2016-2016. IBC Code classifies creditors into two categories, OA, operational creditors, OC, equals suppliers, contractors, salaried employee sec. OB, financial creditors, FC, equals banks, NBFC, bond, and other debt security holders, plus home buyers. If an individual or partnership firm or company defaults on a business loan of X lakh or more, then, above types of creditors approach National Company Law Tribunal, NCLT, to initiate proceedings under the INB Code. NCLT has over 10 benches across India. Also has facility for e-filing of applications. NCLT must accept or reject application within 14 days. Within that period, an insolvency professional, IP, will make a resolution plan, e.g. blackdown pointing double triangle loan interest, extend loan tenure, or IP could even find another investor to finance the pending project, etc. IP will present the plan to Committee of Creditors, COC, Madup of the Financial Creditors, FC. In this committee, FC's voting power is based on AMT of loans given by lender. If X% of the FCS agree with such resolution plan, then it will be set in motion, otherwise, IP will liquidate the assets to recover the loan. Appeal structure. A. If borrower is individual or partnership firm at DRT DRAT of Safisi Act. OR. B. If borrower is a company at National Company Law Appellate Tribunal, NCLAT. Of the Companies Act. 14.17.1 Scales, raised hand IBC not applicable on following borrowers. IBC. Willful defaulter, a borrower who has the capacity to repay, but is not repaying the loan. E.g. Vijay Mallya was declared willful defaulter by SBI, 2017. Total number of willful defaulters 2017, year 2019, 2,208, year 2020, 2,494, 2021. Incapable defaulter. A borrower whose loan account is in NPA for more than a year, and he has no capacity to repay even partial loan. amount. Above, two categories of borrowers are not eligible for I&B resolution process. Their assets will be directly liquidated under SAFISI Act. 14.17.2 Scales Insolvency and Bankruptcy Code Amendment, 2018. RERA registered building, home and office buyers are classified as financial creditors. So, if builder unable to finish project, unable to repay the loans to banks, home buyers will have voting power in the I&B resolution process. More RERA in Pill number 6. It black down pointing double triangle the voting requirements for faster resolution, table 3, these percent are for observation. Raised hand exact numbers not important for exam. Lenders voting requirements, before after routine decisions, 75% 51% key decisions like appointing IP, extending deadlines for resolution process. Approving the resolution plan, 75% 66%. Withdrawing resolution plan from NCLT, not IMP, 90%, 14.17.3 Scales IBC Code, First Amendment Act 2019 August. It was passed by Parliament, with following features. Must finish entire process within 330 days, instead of earlier 180 to 270 days while a limit. If too many FCS, e.g. homebuyers, they may appoint a representative, 4 to attend the committee of creditors on their behalf, for smoother and systematic conduct of meeting. 14.17.4 Scales IBC Code, Second Amendment Act 2019 more technical reforms in the law. It shows that IBC is a work in progress, many operational difficulties equals Gov has to keep changing the norms of amendments. IBC is like a mobile app, which is still in beta, under development stage. So frequently new updates have to be released. This is a criticism, shortcoming of IBC Act. Batch, PCB 7, Mrunal 14.17.5 Scales, IBC Prepacks. Figure 2. Prepack system is found in United Kingdom, and the United States IBC 2021 Ordinance, and later Amendment Bill, aim to enable this in India for MSMEs. Corporate Insolvency Resolution Process, CIRP, Prepackaged Insolvency Resolution Process, PIRP. IBC's formal process. Lenders file complaint to NCLT Insolvency Professional Appointed Loan Restructuring Proposal, if not approved by lenders auctioning. Prepackaging equals borrower company informally, discreetly, negotiates a resolution plan with its lenders or buyer parties who may be interested in its action before approaching IBC or NCLT process. Equals. E.g. Anil proposes, I'm unable to repay loan, but I'm getting new partner, investor Mahindra. Together we'll revive the biz and repay 80% loan. If this is agreeable to lenders, they'll send letter to NCLT, we've internally agreed for this plan. PLZ give judicial approval to it. If resolution plan not aggregable to lenders, then public auction, open auction conducted. Public auction not conducted, but Swiss challenge allowed. What is the meaning of this word? ANS, explained in video lecture. Time limit. Up to 330 days time limit equals 120 days equals faster than CIRP, more number of days equals more negative headlines in newspaper. Equals black down pointing double triangle confidence of customers and investors, e.g. customer may. Benefit. A quick, speedy, and discreet, confidential way of completing the insolvency resolution process. Batch, PCB 7. Corporate Insolvency Resolution Process, CIRP, Prepackaged Insolvency Resolution Process, PIRP. Not by Videocon refrigerator. If he continuously sees negative news and starts to fear that company will shut down, he'll not get warranty or repair service after 3 to 5 years. Prevents the stigma, a bad publicity, a damage to brand image associated with formal IBC proceedings. Else in future difficult to get investors or customers or clients. Equals. Least disruptive to the businesses. Cost effective. Helps in workers' job preservation, compared to a scenario where company is shut down, CIRP applicable to all small and big enterprises. Only available to micro, small and medium enterprises, MSMEs, as per 2021's IBC Ordinance or Amendment Bill. 14.17.6 Scales. IBBI Directive on Avoidance Transaction, and 500 other technical things raised hand. Such technical topics not important for the scope of the exam. If any teacher teaching at private quizmaster is asking MCQ on it, then please ask them to first go through previous year's official papers and ask him to prove where's the pattern of such questions being asked in real exam. Hashtag 14.17.7 Scales Minerva IBC Ordinance for Act 2020 to suspend new cases. 2020 Gov issues ordinance to amend IBC Code. Corona equals business is down, difficult to work out any resolution plan. So, no fresh case will be registered in IBC Code for next X months because Corona. X equals 24 March 2021 raised hand exact dates not IMP, IBC Ordinance, for Act 2020 case, can start if loan default of minimum _ amount before minimum 1 Indian rupee lakh. After minimum 1 Indian rupee crore, so even after suspension is lifted, most of the small businessmen will be spared from IBC proceedings. 14.17.8 Scales Insolvency and Bankruptcy Board of India, IBBI. IBBI is the statutory body that monitors and implements I&B Code 2016. IBBI's administrative control rests with Ministry of Corporate Affairs. It has one chairman, one nominated member from RBI, 8 from Gov side equals total 10 people. First chairman of IBBI, MS Sahu. Present chairman, Ravi Mittal, 2022. Chairman has 5 years 65 age tenure. Also eligible for reappointment. IBBI selects insolvency professionals agencies, IPAs. These IPAs enroll and supervise the members practicing as insolvency professionals, IPS. Presently, 3 organizations given IPA status viz. 1. ICAI, Chartered Accounts, 2. ICSI, Company Secretaries, and 3. Institute of Cost Accountants. 14.17.9 IBBI Information Utility IBBI also selects Information Utility, IU, organization to maintain database of borrowers. In 2017, NESL, National E-Governance Services Limited, owned by consortium of SBI, LIC etc., was the first to get the IU status from IBBI. It is compulsory for lenders to share data with IU. IU helps lenders in 2 ways. 1. By looking at borrower's credit history, lenders can make informed decisions about whether to give loan or not, and how much interest to charge. 2. This database helps establishing documentary proofs during NCLT, the DRT, the judicial or liquidation proceedings. 14.17.10 Scales, Insolvency MISC, Org, Indian Institute of Corporate Affairs. IICA, an autonomous body under Ministry of Corporate Affairs. It has launched a 2-year graduate insolvency program, GIP. The student passing this program can register as IP without the mandatory 10 years experience. 14.17.11 Project Sashakt by Finance Ministry, 2018. 2018 July, Finman's Project Sashakt for PSB NPA on report by Sunil Mehta, PNB CEO. Gave guidelines to resolve the NPA problem in a time-bound manner in public sector banks. What were those guidelines? Too outdated. So, I'm removing it from latest handout. Black question mark ornament. What was the purpose of the intercreditor agreement signed by Indian banks and financial institutions under Project Sashakt? UPSC Prelims 2019. A. To lessen the government of India's perennial burden of fiscal deficit and current account deficit. B. To support the infrastructure projects of central and state governments. C. To act as independent regulator in case of applications for loans of 50 Indian rupees crore or more. D. White heavy checkmark to aim at faster resolution of stressed assets of 50 crore Indian rupees or more which are under consortium lending. Answer to above MCQ is option D. But now it is outdated current affairs, so we will not study the exact matter. 14.17.12 ATM Anibar Insolvency Micro, Small, Medium Enterprises Ref Pillar #1D, Financial Inclusion Mudra, and other loan schemes. 14.17.13 Scales, Cross-border insolvency. Cross-border insolvency has 2 facets. 1. Foreign creditors should be able to recover money lent to Indian corporates, and vice versa. 2. During Indian companies' insolvency in India, the Indian lenders should be able to recover money from Indian companies' foreign assets easily, and vice versa. IBC sections 234 and 235 have provisions for it, but they are not notified yet, so they are not enforced. This leads to uncertainty of outcomes for creditors and debtors. 2018, Corporate Affairs Ministry's Insolvency Law, Reforms, Committee under Injeta Sreenivas recommended we should create a separate law for cross-border insolvency. More than 40 nations use United Nations Commission on International Trade Law, UNCITRAL, S Model Law of Cross-Border Insolvency, 1997, so we can use it as a template while making our own law. S22 also recommended the same. Budget 2022. We will amend IBC code to facilitate cross-border insolvency resolution. Batch, PC 14.18 Scales, Voluntary liquidation of companies. Liquidation is the process of shutting down a company. 2 types of liquidations. 1. Involuntary liquidation. Due to loan default it can be conducted either through IBC code or 2. Sufisi Act depending on the case. 2. Voluntary liquidation. When the owner has not committed any loan default but wants to shut down the business. Voluntary liquidation can be done through A. Sending application to the Registrar of Companies under Companies Act, 2013. B. Sending application under the Insolvency Bankruptcy Code. However, method A is more popular than B at present. 14.18.1 Scales, challenges involuntary liquidation. Owner of the company needs to get no objection certificate, no C, from various orgs such as CBDT and CBIC, more about them in pillar number 2, EPFO, and ESIC, more about them in pillar #1D2. But no well-defined standard operating procedures, SOPs, time limits in the Gov organizations for granting NOC. This results in delays, a demand for bribes, harassment of the owner. S22 suggested simplify the procedure, give clarity in rules, set up an online portal that combines all the steps at one place. Budget 2022 will set up a center for processing accelerated corporate exit, CPACE, to faster voluntary liquidation, a winding up of the companies. Presently, this process takes nearly 2 years. We will reduce it to just 6 months. 14.19 Scales, Economic Surveys on IBC NPA. 14.19.1 Economic Survey 2018 to 19 on IBC NPA. With I&B code and other measures by RBI equals NPA percent has black down pointing double triangle. Batch, PCB7, Mrunal's economy. I&B code's time-bound mechanisms have prompted behavioral changes in corporate borrowers. Now they fear losing control of the company. This has improved corporate governance, cash and financial discipline. By the 31st of March 2018, 50,000 Indian rupees crores worth NPAs have been upgraded to STD assets, meaning though arrogant, borrowers have been forced to resume paying principal and interest regularly. Due to IBC code, India's rank has improved in World Bank's Ease of Doing Biz report. More in pillar number 4. However, we also need to begin more reforms. We need to increase the number of NCLT benches, number of IP professionals, use ICT technology for faster case proceedings. We should enact separate law on cross-border insolvency. Group insolvency, big industrialists usually operate through groups of companies, each having a separate identity, e.g. Tata Sons Limited 1, TCS 2, Tata Motors 3, Tata Steel, etc. If one of these companies become insolvent, it creates negative ripples on entire group's financial health. Certain legal technical reforms are necessary to address such group insolvency. Certain legal technical reforms to address insolvency cases involving individual proprietors and partnership firms. They are legally different entities than companies under Companies Act. More in 1C, SEBI handout. 14.19.2 Scales, Economic Survey 2020 on IBC NPA, released in 2020 Jan 31 ST. NPA had reached its peak in 2018, but now it appears to be declining because of various measures taken by the government and RBI. Appreciated that IBC proceedings take on average 340 days to complete, unlike SAFISA legal proceedings, which take 4.3 years. Appreciated that IBC helps recovering more amount of loan than SAFISI in 2018 to 19 approx. Amount recovered in crores 2017 to 18 2018 to 19 SAFISI, and DRT 33,000 52,000 IBC 5,000 71,000. 14.20 S21 Regulatory Forbearance. During a great financial crisis, the Reserve Bank may allow for some relaxation in above guidelines. For example, restructuring of loans, a stressed NPA while a borrower's loan tenure black up pointing double triangle, and or loan interest rate black down pointing double triangle, as per RBI norms. Then such restructured loan account will be reclassified from NPA to standard account. Such temporary relief from the strict rules is called regulatory forbearance. RBI permitted it after 2007-08 subprime and global financial crisis. But then it results into following side effects. Batch. Zombie lending equals weak bank keeps giving new loans to weak, subprime, over-leveraged borrower, evergreening of loans equals companies taking new loans to repay the previous bad loans. Many loan scams occurred. ICICI Videocon Loan, Yes Bank Rana Kapoor, PNB Nirav Modi, Punjab and Maharashtra Cooperative Bank, PMC, etc. Corona 2020 onwards, RBI again relaxed many rules. So Economic Survey recommended RBI must stop these relaxation immediately after Corona crisis is over. Else, NPA problem could worsen. Because those who do not learn from history are condemned to repeat it. Said Spanish philosopher George Santayana. 14.21 Borrowers Database and Surveillance. 14.21.1s20 Use AIML technology in PSBs. Most of the loan information processing equals credit analytics happens manually. This causes inefficiency, frauds and loan default. Tools such as artificial intelligence, AI, machine learning, ML, can help them in following ways. Willful defaulters usually create fictitious companies to transfer their assets, their shares and money just before they stop paying loan installments. Artificial intelligence, AI, can alert the authorities through real-time surveillance and data analytics of the borrower's NEFT, RTGS, a demat account transaction. Geotagging of assets, i.e. adding longitude and latitude data with the photos and videos of the factory building, machinery, vehicles, aeroplanes, helicopter, etc. Then, scamster can't pledge fictitious assets as collaterals for loans. Scamster can't pledge the same asset as collateral to multiple banks or NBFCs. GPS chips may be embedded in factory machines and vehicle to track their real-time location. If scamsters move the machinery out of the factory, the banker will be alerted. Bankers can remotely disable machines or vehicles if loans are unpaid. Blockchain technology can be used for storing and verifying the authenticity of the data. AI can monitor social media activities. Borrower is not paying the loan and yet sharing the Switzerland vacation photos on Instagram equals he is a willful defaulter. Attach his assets under the SAFISI Act. Raised hand caution. Borrower's privacy and dignity should also be respected while doing such computerized surveillance. Figure 3, Instagram. 14.21.2 ES20. Set up PSBN network. Government should create a new organization named PSBN, Public Sector Bank Network, which will act as a financial technology, a fintech hub, fintech. Whenever a borrower applies for a loan to a public sector bank, details will be sent to PSBN. PSBN will verify the creditworthiness and risk profile of the applicant through artificial intelligence, AI, machine learning, ML, and big data analytics, as explained in the previous section. EKYC. Know your customer. Aadhaar verification, cross-checking his Aadhaar number against financial data from Corporate Affairs Ministry, SEBI Share Market, Income Tax Department, GST, etc. Benefit: fraud prevention, black down pointing, double triangle chances, NPAs, quicker decision making, process loan. Applications faster, cost saving for individual banks, as all of them can use a single hub instead of spending on separate servers or tech. 14.21.3 RBI Public Credit Registry. Presently, multiple organizations keep borrowers' database, a credit history viz. 1. Under the INB Code, Insolvency and Bankruptcy Board of India, IBBI, has authorized the National E-Governance Services Limited, NESL, to act as an information utility, IU. 2. Separately, there are credit information companies, CIC, and credit rating company, CIA, more in pillar #1B1 classification of NBFCs. 3. RBI has its own central repository of information on large credits, CRILC, for loans above 5 crore rupees. Banks and NBFCs have to submit weekly updates in this portal. But not all of these databases are under the direct control of RBI. Each has their own methodology for data collection and tabulation. Not all of these databases are covering all individual and corporate borrowers. Figure 4. So, RBI's Yeshwant M. Diostali Committee, 2017-18, recommended setting up a digital public credit registry, PCR, with following features. 1. PCR will be set up under RBI, using data from SEBI, Corporate Affairs Ministry, GST authorities, IBBI, banks, NBFCs, etc. 2. PCR will help lenders to get complete 360-degree profile of borrower on real-time basis. 3. PCR will help RBI in early detection of systematic stress, checking the efficacy of monetary policy, and other big data analytics. Black question mark ornament MCQ. RBI constituted a high-level task force on public credit registry, PCR, headed by CDS 2018 I. A. Sekakhanam, B. Vishokamulye, C. Sriram Kalyanaraman, D. Y. M. Diostali. FAQ. WHY not merge PSBN network with RBI's PCR registry. ANS equals send suggestion to RBI plus CEA that they SHD not do duplication of work. Hashtag 14.21.4 Legal Entity Identifier, LEI, number. Figure 5. Objective. Even if a company is blacklisted by Indian banks, it could apply for loans overseas, and those overseas bankers may not be aware of company's history. So, there should be a global Aadhaar card number for companies, and they must be forced to quote that number during every financial transaction. After USA's subprime crisis and global financial crisis, GFC, the G20 and its Financial Stability Board, FSB, came up this LEI concept, a 20-digit alphanumeric code. Lay's Global Boss, Global Legal Entity Identifier Foundation, GLEIF, Frankfurt, Germany. Lay's Indian Agent, Clearing Corporation of India. From the 1st of October, 2022, RBI has ordered all companies undertaking cross-border transactions of 50 rupees crore or more to quote this number in financial transaction. RBI has power to issue such directives under Payment and Settlement Systems Act, 2007 and Banking Regulation Act 1949. 14.22-Scales Fugitive Economic Offenders ACT, 2018. Figure 6.9. This act targets economic offenders accused of check dishonor, loan investment, chit fund scam, money laundering, etc. worth 100 Indian rupees crores, and left India to avoid facing prosecution or arrest. Bat. Special courts under the PMLA, Prevention of Money Laundering Act, 2002, will order the villain to appear within 6 weeks. If not, then he is declared fugitive economic offender. His Indian and overseas and Benami properties will be attached. Once property attached, the Union Gov will oversee its administration or liquidation. No ordinary civil court, tribunal can give stay order. Villain can make appeal only in High Court and Supreme Court. If borrowers don't repay, Safisi auctions give little recovery, CRSLR insufficient to repay deposits, then bank collapse imminent. Then, how to protect the depositors? 14.23 Dictact, Objective and Limitations. Figure 7. 1961, Deposit Insurance and Credit Guarantee Corporation Act mandates that all types of banks must buy insurance on their deposit accounts from DICGC. Banks have to pay premium for this insurance. DICGC is 100% owned by RBI. RBI DY, Governor acts as chairman of DICGC. HQ, Mumbai. When a bank shuts down, DICGC will pay up to 1 Indian rupee lakh insurance to every deposit holder for his principal and interest. Budget 2020, announced black up pointing double triangle the insurance coverage to 5 Indian rupees lakhs. 2021, Government introduces Deposit Insurance and Credit Guarantee Corporation Amendment, Bill before After reform, up to 1 Indian rupee lakh deposit insured protection increased up to 5 rupees lakh. When will depositors get back above amount? No clear timelines. Often they had to wait for many years. When RBI imposes withdrawal moratorium on a weak bank within 90 days of that event, DICGC will pay depositors 90. Batch, PCB7. Banks had to pay premium fees to DICGC at the rate of 10 Indian rupees paise to ensure every 100 Indian rupees worth of deposits. 100 Indian rupees 10. Dick can black up pointing double triangle increase the premium fees to 12 to 15 Indian rupees paise, i.e. 20% to 50% more than the original fees. Raised hand exact figures no timp. All types of banks covered, but NBFCs not covered. Same as left cell. Previously, DICGC provided guarantee cover to bank on the loans granted to priority sector borrowers. E.g. if micro-enterprise owner did not repay PSL loans, DICGC would cover losses of the banks. Hence its name contains the word Credit Guarantee Corporation. But, with formation of SIDBI, 1990, National Credit Guarantee Trustee Company Limited, NCGTC, 2016, etc., this credit guarantee work divided among many organizations, REF, pillar hashtag 1D. But we need not PhD over it. Hashtag 14.23.1 Limitation of DICGC. If a customer deposited more than 5 Indian rupees lakh in a single commercial or cooperative bank, then he gets only 5 Indian rupees lakh from DICGC. And for the remaining amount he must wait till RBI, a cooperative registrar, liquidates the bank. Ref 1B1, Banking Regulation Ordinance 2020. DIC doesn't cover PACs and NBFCs. Those victims may have to approach courts. 2002, UTI, a gov-owned mutual fund company, made big losses. DIC not liable to protect UTI clients because it is not a bank. So, Gov had to pay 14,500 Indian rupees crores to customers of UTI mutual fund. So, Financial Sector Legislative Reform Commission, FSLRC, under Justice B. N. Sri Krishna, 2011-13, recommended a new or called Resolution Corporation, RC, via Financial Resolution and Deposit Insurance, FRDI, Bill or Law. DIG. Gov had proposed the FRDI bill in 2017, but too much opposition in media and public, so withdrew it in 2018. It's a defunct topic. We'll not waste time learning its salient features. Hashtag 14.24, Bad Bank, Narkle, IDRCL 2021 Intro. Data, is 201617, had found that total 2 Indian rupees lakh crore of bank money is stuck in large-sized NPA accounts. Each of this loan account having 500 crore Indian rupees or more. 200,000,500. Origin, sometimes, the resolution of large-sized NPA accounts is difficult under IBC code, e.g. Vijay Mallya being a willful defaulter, so he is not eligible for IBC. Under Sufisi Act such assets could be auctioned off, but sometimes bidders and ARCs, E.G. Anil Ambani's ARC, do not have enough financial capacity to purchase such big assets, worth 500 to 500 Indian rupees crores. Therefore, Economic Survey 2016-17 had suggested to set up a bad bank named Public Sector Asset Rehabilitation Agency PARA. To buy bad loans from, try to get the maximum value from loan restructuring or liquidation auction, and absorb the losses. Then, Budget 2021 announced set up an Asset Reconstruction Company, ARC, and Asset Management Company, AMC, to take over the bad loans from banks. 2021. Gov will not have any shareholding in ARC, AMC. Banks will set these organizations up with their own funds. Examples of such bad banks in other countries: Danahata in Malaysia, UCAR in UK. 14.24.1 Bad Bank Structure. NARCL-ARC, founded in 2021. IDRCL-AMC, founded in 2021. Type Asset Reconstruction Company, ARC, Asset Management Company, AMC, Full Form National Asset Reconstruction Company Limited, NARCL, India Debt Resolution Company Limited. IDRCL, equals type registered company under Companies Act. So not a statutory or constitutional body, given license by RBI for ARC. Registered company under Companies Act. Happy face, function to purchase bad loan assets from banks. To manage a value addition auction those bad loan assets, which were purchased by NARCL. E.g. factory, airplanes, bulldozer. Ownership or shareholding 51% PSBs like SBI, BOB, PNB ***. 49% by PVT banks and NBFCs hashtag 49%, public sector banks, NBFCs. Batch, PCB7, Mrunal's economy pillar hashtag 1B2, bad loans and burning issues in banking page 164. NARCL-ARC, founded in 2021. IDRCL-AMC, founded in 2021, 51%, private sector bank, NBFCs. Hashtag tenure this organization will exist for 5 years. Same as left cell ***, NARCL ownership 51% shareholding, ownership, among 8 public sector banks, PSB, Viz. SBI, 13.17%, Punjab National Bank, 12%, Bank of Baroda, Canara Bank, Bank of Maharashtra, Union Bank of India, Indian Bank, Bank of India. Note, future some of these PSBs may get merged so the percent may change. FAQs, hashtag what are their names? ANS. Not explicitly mentioned in press note. Hashtag Happy Smiley AMC got license from RBI or SEBI. ANS, same as above. Bad bank means only NARCL, or NARCL plus IDRCL, ANS, same as above. But from House 17 had given the vision of bad bank, it should be the combined work of NARCL plus IDRCL equals bad bank. 14.24.2 Bad bank, functioning, 15% 85%. 30,600 crore rupees. Suppose Axis Bank has a bad loan account worth 200 Indian rupees. Axis may conduct an Swiss challenge auction. Bad bank offers 100 Indian rupees. Anil Ambani's ARC offers 95 Indian rupees. Mahindra offers 92 Indian rupees. Then Axis will sell to Bad bank for 100 Indian rupees. Because it's the highest bidder, Bad bank will pay Axis 100 equals partially in currency, 15 Indian rupees, plus partially in security receipts, SR with 85 Indian rupees. Security receipts, SR, is a piece of paper issued by Bad bank promising to pay the remaining dues of amount, 85 Indian rupees, to banker in 5 years. Security receipts, SR, is a legally valid instrument under the SAFESI Act. If the Axis banker very urgently requiring money, then he may resell the SR at discount, e.g. at 80 Indian rupees, to another bank, insurance or pension company, AIFI, e.g. SIDBI, NABARD, etc. Then those new SR holders will receive the money, 85 Indian rupees, from Bad bank in future. If Bad bank faces problems in honouring the SR payment deadlines, then Union Gov has given sovereign guarantee of 30,600 crore rupees to security receipts, SR. This sovereign guarantee valid for 5 years. 14.24.3 Bad bank, benefits and challenges. Faster resolution of large-sized NPA. Individual banks, bad loan size, black down arrow, equals Basel II capital requirement, black down arrow, further benefits, equals RE. Paste the points given in intro and conclusion. Ultimately, the losses caused by VJ Malias are paid by depositors of investors of the banks for NBFCs who own NARCL and IDRCL, and taxpayers, using whose money Govs is giving. Batch, PCB. Sovereign guarantee to security receipts. 14.24.4 Bad bank. Writing hand conclusion. NARCL aims to resolve stressed loan accounts above 500 Indian rupees crore each. Total about 2 Indian rupees lakh crore stuck in such loan accounts. Thus, individual banks will be relieved from not having to waste time haggling with NPA borrower. Bankers will be able to focus energy on business expansion, financial inclusion. Thus, Gov taken an appreciable step. It will help in a long way in reinvigorating Indian banking sector. 14.25 Prompt corrective action, PCA, framework. Figure 8, need not lose too much sleep, unless preparing for RBI officer's exam. FAQ, what about XYZ type of banker NBFC, which is not mentioned in above chart? ANS. Then XYZ type of banker NBFC is not subjected to above PCA norms at present. FAQ, does it mean non-scheduled banks are not supervised by RBI? ANS. They are supervised by RBI under Banking Regulation Act. 2002, RBI Governor Bimal Jalan designed it for all scheduled commercial banks, except RRBs. 2018, NABARD announced separate prompt corrective action, PCA, framework for regional rural banks, RRBs. Before 2022, RBI monitored bankers on following indicators. From 2022, RBI will monitor this under PCB framework. Capital sufficiency, Basel III. Same as left cell. Asset quality, NPA or bad loans. Same as left cell. Batch, PCB 7. Profitability, return on assets, ROA. Replaced with leverage. What it means, how it works. How is it different than past? Equals not imp. But sufficient to know that bigger or higher leverage is not a good sign. Then RBI classifies the banks into risk threshold number 1, number 2, number 3. Higher the number, higher the risk. Then, accordingly, RBI will take corrective actions such as RBI giving strict warning, conducting deeper audit and supervision. Restricting banks' directors' salaries and dividend distribution to its investors. Restricting banks' branch expansion and lending operations. Forcing merger shutdown under Banking Regulation Act 1949. If a PCA-listed bank wants to get whitelist, it'll have to black down pointing double triangle its NPA, obtain additional capital. Black up pointing double triangle its profitability. PCA is monetary policy qualitative, a selective tool direct action. As of 2020 February, 4 PSBs in this list viz. Indian Overseas Bank, IOB, Central Bank of India, UCO Bank and United Bank of India. Raised hand dynamically changing info, so we need not remember, lose sleep for MCQs. 14.25.1 RBI's prompt corrective action, PCA, for NBFCs, from 1/10, 2022, RBI to monitor NBFCs using 3 indicators and parameters. 1. Non-performing assets. 2. Basel Capital Adequacy Ratio. 3. Basel Tier 1 Capital. What do they mean? Not imp. Accordingly, RBI to classify the NBFCs in risk category #1-2-3. Higher risk, higher restrictions, e.g. raised hand 1, restriction on branch expansion, raised hand 2, halt on dividend distribution, raised hand 3, promoters will be asked to infuse capital in NBFC, etc., etc. Above PCA norms applicable on white heavy checkmark deposit taking NBFCs. E.G. Bajaj Finserv. But raised hand not applicable on Gov-owned NBFCs, E.G. UTI Mutual Fund, primary dealers, housing finance companies, HFC, non-deposit taking NBFCs, e.g. ILFS. 14.25.2 Supervisory Action Framework for Urban Cooperative Banks, 2012. RBI launched Supervisory Action Framework, SAF, for urban cooperative banks, UCBs. It is similar to PCA framework on commercial banks. Blackup pointing double triangle tightened it further in 2014, tightened further in 2020. 2022, launched 4-tier regulation framework. But no TIMP for IAS exam. Batch, PCB7, Mrunal's economy pillar. FAQ, how is SAF similar or different than PCA framework? Not IMP for IAS. 14.25.3 Atmanerba, RBI orders bank to halt dividend distribution. Scheduled commercial banks and cooperative banks shall not make any further dividend payouts from profits made during FY 2020-21 until further instructions. 2021, RBI relaxes these norms to allow dividend release. This will help the banks to conserve funds and absorb losses in an environment of heightened uncertainty in Corona. Separately, FinMinute has ordered PSBs to reduce 20% non-core spending, e.g. PSBs have habit of buying Audi cars for their managing directors, but now they'll not be able to waste money like that. 20%. 14.25.4 Regulations Review Authority, RI 2.0, for ease of implementing RBI rules. RBI has set up RI 1.0 in 1999 for 1 year, and RI 2.0 in 2021 for 1 year. Chairman, RBI's DY, Governor M. Rajeshwar IAO. Who are other members? Not IMP. Objective, to give suggestions to RBI to simplify its rules or regulations so bank NBFCs have ease of doing business. 14.26 Basel I Norms, 3, Bank for International Settlements, BIS, is an international institution made up of 60 countries' central banks. HQ at Basel, Switzerland. Its Committee on Banking Supervision set norms in 1988, I, 2004, 2, 2011, 3, to ensure global financial stability. From the 1st of April, 2013, RBI began phased implementation of Basel III norms in India. First, a bank needs to calculate its risk-weighted assets, RWA. Against these RWA, universal, scheduled commercial banks, SCB, must keep O minimum capital to risk-weighted assets ratio, CRAR, at 9% or higher from the 31st of March, 2019. O a percent capital compensation buffer, CCB, from 20 date. O B percent countercyclic capital buffer, CCCB, whenever RBI notifies. C percent leverage ratio, LR, D percent net stable funding ratio, NSFR, E percent high quality liquid assets, HQLA, F percent liquidity coverage ratio, LCR, and so on, many things. Figure 9, we need not bother with Tier 1, Tier 2 capital etc. Hashtag. Raised hand FAQ. How exactly do CCB, CCCB, LR, NSFR, HQLA, LCR etc. work? ANS. Not important for exam, beyond the basic word association, that they are related to Basel norms. Hashtag. Each member country's central bank can prescribe different percent ratios depending on their country's situation. As bad loans, NPA, black up pointing double triangle equals banks. Asset quality degrades, black down pointing double triangle equals its risk-weighted assets. RWA, black up pointing double triangle bank must arrange more capital to comply with these ratios, norms and buffers. If a bank can't comply with Basel norms, RBI puts it in PCA list. In worst case, bank will have to merge, sell off its business to another bank or shut down. Basel norms also apply on differential commercial banks, LAB, RRB, SFB, PYB, cooperative banks, AIFI, EXIM, NABARD, NHB, SIDB, and certain category of NBFCs. But RBI can prescribe separate norms or limits the deadlines for them. 14.26.1 Basel III norms, capital tiers. Basel III norms require banks to keep capital against their risk-weighted asset ratio. This capital is subdivided into batch. Capital of a bank instruments, the subtypes. List not exhaustive. Tier 1, core capital common equity Tier 1, CET1, e.g. ordinary shares. Additional Tier 1, AT1, e.g. at 1 bonds, preferential shares etc. Tier 2 bonds are debenture, hybrid instruments. Basel III prescribed that banks must keep minimum X percent, Y percent etc. in each of these tiers, depending on their risk-weighted asset, RWA. 14.2 6.2 Additional Tier 1, AT1, bonds. They have no maturity date, i.e. bank has to pay interest for infinite time, a perpetuity, and principal will not be returned. However, bank may buy back them after certain years. If or when a bank makes huge losses, AT1 bonds liability may be A, written off, or B, converted into shares, process called bail-in. AT1 bonds are in news because of scam in Yes Bank. Raised hand beyond this, any what, a why, how, or PhD, ball-by-ball commentary on AT1 and SC judgments, and pills equals poor cost benefit for MCQ. Outdated current. Hashtag. 14.26.30 Coupon bonds for PSB recapitalization ref, Pillar 1C share market. Black question mark ornament. What is the objective of Basel III norms? UPSC Prelim 2016. A. Develop national strategies for biological diversity. B. Reduce the GHG emissions, but places a heavier burden on developed countries. C. Transfer technology from developed countries to poor countries to replace chlorofluorocarbons in refrigeration. D. Improve banking sector's ability to deal with financial and economic stress and improve risk management. Black question mark ornament Basel Convention provides, UPSC IES 2020, A. Indian Standards for Pollution Measurement and Prevention, B. International Guidelines to control the transboundary movements of hazardous wastes between different countries, C. Indian Standards for the disposal of municipal and industrial wastes, D. International Standards to categorize pollution in air and wastewater. 14.26.4 DSIB, Domestic Systematic Important Banks in 2010, G20's Brainchild Financial Stability Board, HQ, Basel, asked countries to identify systematically important financial institutions and put framework to reduce risk in them. Side note, same parents responsible for birth of legal entity identifier, LEI. Batch, PC. Each year, RBI identifies banks that too big to fail equals if they fail, it'll severely hurt the economy, and labels them as Domestic Systematic Important Banks, DSIB, and orders them keep additional equity capital against their risk-weight assets, RWA, and other technical norms. Presently, 3 DSIBs in India, SBI, ICICI, HDFC, latest entry. 14.27, Basel norms deferred, suspended in Corona self-explanatory from the topic title itself. We need not lose sleep over new deadlines, as they may again get extended. So, dynamic information equals dangers of answer key becoming invalid, so, smart examiners usually avoid it. Hashtag. 14.28 Banks balance sheet, audit norms. 14.28.1 Ind AS accounting norms deferred. Ministry of Corporate Affairs, MCA, ordered all the companies to keep their balance sheet, as per the format prescribed in the Indian Accounting Standards, Ind AS. Benefit? Ind AS accounting format makes it easier for the local and global investors and regulators to compare, analyze and understand a company's financial position from its balance sheet. Ind AS is not part of Basel norm. But, since commercial banks are basically companies doing banking activity, so they also have to comply to Ind AS norms. But, only RBI has the power to notify its implementation deadline on banks. 2020 critics demanded RBI should implement it. What is the deadline? Not imp. 14.29 Recapitalization of PSBS. If a bank doesn't have enough capital to comply with Basel III norms, it can issue debt, bonds, and equities, shares, to gather new capital. 2015, estimation that public sector banks, PSBs, will require 1.8 Indian rupees lakh crore additional capital by the 31st of March, 19 to comply with Basel III norms. So, Finance Ministry's Department of Financial Services up with Indradhanush plan for phased recapitalization of PSBs with 70,000 Indian rupees crores from 2015 to 2018. Individual PSB will get funding based on outcomes of performance. 2017, it became clear 70,000 Indian rupees crores was insufficient for Basel III compliance. So, Modi Gov announced more amount. To arrange for this, Gov began to issue bank recapitalization bonds, RCB, in the market with following features. These bonds will have interest rate of tilde 7%, mature at 2028 to 2033. Non-transferable to third party, non-convertible into shares. Batch, PCB7, Mrunal's Gov instructed PSBs to mobilize equity, share, capital from private investors. However, investors shy away from smaller banks with weak balance sheets, so BMB and 5 associated banks merged with SBI, 2017. Vijaya and Dina to be merged with Bob, 2019, the 1st of April, etc. More in pillar hashtag 1B1. Budget 2020. FM said we've given 3.50 Indian rupees lakh CR in the last years. Budget 2021. 20,000 Indian rupees crores for PSB recapitalization in financial year 2021 to 22. Budget 2022. Gov instructed PSBs to mobilize equity, share, capital from private investors. However, investors shy away from smaller banks with weak balance sheets, so BMB and 5 associated banks merged with SBI, 2017. Vijaya and Dina to be merged with Bob, 2019, the 1st of April, etc. Batch. Batch, PCB7, Mrunal's economy pillar hashtag 1B2, bad loans and burning issues in banking page 1. Capital of a bank instruments the subtypes, list not exhaustive tier 1, core capital common equity tier 1, CET1, e.g. ordinary shares. Each year, RBI identifies banks that too big to fail equals if they fail, it'll severely hurt the economy, and labels them as Domestic Systematic Important Banks, DSIB, and orders them keep additional equity capital against their risk-weight assets, RWA, and other technical norms. Presently, 3 DSIBS in India, SBI, ICICI, HDFC, latest entry. 14.27, Basel norms deferred, suspended in Corona self-explanatory from the topic title itself. We need not lose sleep over new deadlines, as they may again get extended. So, dynamic information equals dangers of answer key becoming invalid, so, smart examiners usually avoid it. Hashtag. 14.28 Banks balance sheet, audit norms. 14.28.1 Ind AS accounting norms deferred. Ministry of Corporate Affairs, MCA, ordered all the companies to keep their balance sheet, as per the format prescribed in the Indian accounting standards, Ind AS. Benefit? Ind AS accounting format makes it easier for the local and global investors and regulators to compare, analyze and understand a company's financial position from its balance sheet. Ind AS is not part of Basel norm. But, since commercial banks are basically companies doing banking activity, so they also have to comply to Ind AS norms. But, only RBI has the power to notify its implementation deadline on banks. 2020 critics demanded RBI should implement it. What is the deadline? Not imp. 14.29 Recapitalization of PSBS. If a bank doesn't have enough capital to comply with Basel III norms, it can issue debt, bonds, and equities, shares, to gather new capital. 2015, estimation that public sector banks, PSBs, will require 1.8 Indian rupees lakh crore additional capital by the 31st of March, 19 to comply with Basel III norms. So, Finance Ministry's Department of Financial Services up with Indradhanush plan for phased recapitalization of PSBs with 70,000 Indian rupees crores from 2015 to 2018. Individual PSB will get funding based on outcomes of performance. 2017, it became clear 70,000 Indian rupees crores was insufficient for Basel III compliance. So, Modi Gov announced more amount. To arrange for this, Gov began to issue bank recapitalization bonds, RCB, in the market with following features. These bonds will have interest rate of ~7%, mature at 2028 to 2033. Non-transferable to third party, non-convertible into shares. Batch, PCB7, Mrunal's economy pillar #1. Gov instructed PSBs to mobilize equity, share, capital from private investors. However, investors shy away from smaller banks with weak balance sheets, so BMB and 5 associated banks merged with SBI, 2017. Vijaya and Dina to be merged with Bob, 2019, the 1st of April, etc. More in pillar #1B1. Budget 2020. FM said we've given 3.50 Indian rupees lakh CR in the last years. Budget 2021. 20,000 Indian rupees crores for PSB recapitalization in financial year 2021 to 22. Budget 2022. No money given for this. Gov's rationale is that PSB's profitability improving, so PSBS can take care of their capitalization problems by themselves by issuing shares, bonds in market. Black question mark ornament MCQ. Find correct statements about governance in PSBs. Sad smiley. UPSC pre-2018, 1. Capital infusion into PSBs by the Gov of India has steadily increased in the last decade. 2. To put the public sector banks in order, the merger of associate banks with the parent state Bank of India has been effected. Answer codes: A, 1 only, B, 2 only, C, both 1 and 2, D, neither 1 nor 2. 14.30 Banking sector, governance and administrative reforms. 14.30.1 Gansangamai, 2015, Pune Fin Minutes, Depth of Financial Services, organized a workshop of financial regulators, public sector bank, insurance companies, etc. It resulted in 3 outcomes. 1. PSB CMD post bifurcated into 1. Separate chairman and 2. Separate MD and CEO so that banks can function in more professional and accountable manner. 2. Indradhanush plan for bank recapitalization, 70,000 Indian rupees crores. 3. Finance Ministry setting up an autonomous body bank board bureau, BBB. 14.30.2 Personnel Selection Bank Board Bureau, BBB, 2016. Figure 10. It is non-constitutional, non-statutory body. It interviews and selects top officials, MD, CEO, chairman and full-time directors, for PSBs, public sector insurance companies, and other public sector financial institutions, e.g. NABARD, SIDBI, etc. Actual appointment done by FinMinutes Department of Financial Services. Just like UPSC selects candidates suitable for IAS, but do PT notifies appointment. BBB also helps the banks in governance reforms, raising capital for Basel II, etc. BBB has 1 chairman, usually a retired IAS, and some members. Black question mark ornament MCQ. Chairman of public sector banks are selected by the __. Prelims 2019. Batch. A. Banks Board Bureau, B. RBI, C. Ministry of Finance, D. Management of concerned bank. Black question mark ornament MCQ. Find correct about Banks Board Bureau, BBB, Prelims 2022, 1. The governor of RBI is the chairman of BBB. 2. BBB recommends for the selection of heads for public sector banks. 3. BBB helps the public sector banks in developing strategies and capital raising plans. Codes: A, 1 and 2 only, B, 2 and 3 only, C, 1 and 3 only, D, 1, 2 and 3. 14.30.3 Personnel Selection, FSIB replaces BBB, 2022, Delhi High Court ruled, BBB cannot select public sector, gov-owned, insurance companies, because of conflict with the other laws related to public sector insurance companies. 2022, then Gov replaced BBB with new body named Financial Services Institutions Bureau, FSIB, to comply with court order. Everything else, function, feature, etc., about FSIB is same as BBB. FAQ, is this not unethical? A big joke to subvert court order. ANS, court has not banned FSIB yet. Gov did not bother to justify loudly in news headlines. Columnist did not bother to loudly criticize. So, I did not bother to phd. Hashtag 14.30.4 PSB Banking Personnel Reforms is 20 suggestions. PSBs should be allowed to do 1. Campus recruitment of at least some specialists, 2. Lateral entry in higher management. PSBs should give employee stock option plan, ESOP, to their employees. ESOP is a type of benefit plan wherein employees given some shares of the company, apart from their regular monthly salary. When and if company makes profit, how does employee benefit from ESOP? 1. Market price of shares black up pointing double triangle, he can sell his shares to a third party for a large gain. 2. The dividend to the shareholders will increase. He can keep the shares with himself, and will get large dividend from the company, in addition of his regular salary. As shareholders, some of these employees may even join as board members, help designing more realistic business policies at the apex level. Thus, ESOP changes mindset from an employee to that of an owner. It encourages the employee to work harder, with more dedication, loyalty and passion for the company's profitability and brand image. One 4.30.5 Enhanced Access and Service Excellence, EASE, Agenda 2018-2017, October. Government announced 2 Indian rupees lakh plus crore package for recapitalization of PSB. But critics argued such relief measures will just make the PSB's officials lazy and undisciplined, moral hazard. So, 2017, November, First Public Sector Bank, PSB, manned and organized by Debtor Financial Services, DFS, at Gurugram. Based on the participants' inputs. 2018, January, FinMinutes Debtor Financial Services released EASE framework, with 6 pillars to make PSBs more responsive and responsible viz. 1. Customer responsiveness. 2. Responsible banking, reduce NPA, prevent frauds. 3. Credit offtake, try to reach out to potential borrowers for home, auto, education, loans. 4. Help MSME entrepreneurs via SIDBI's pajamamitra.com portal. Approve or reject loans in not more than 15 days. 5. Deepening financial inclusion and digitalization. 6. Employees human resource management, HRM, improve with training, performance-linked promotion salaries posting transfers etc. Implementation. Each whole-time director of a PSB will be entrusted with 1 pillar of the EASE framework. Their performance will be checked by the PSB's board of directors. An independent agency will be tasked to check public perception. Finally, PSB banks will be ranked, e.g. 2018, PNB number 1. 14.30.6 EASE 3.0, Tech-enabled banking, 2020-21. 2018 equals EASE 1.0 2019, EASE 2.0, some more fancy feature, but no TIMP, 2020, EASE 3.0 Finance Minister proposed smart, tech-enabled banking for aspiring India. Associated keywords, doorstep banking, dial a loan, credit at click, palm banking, using phone and tablets. Table 4, points for assembling mains answers rapidly eco, survey 2015, 4R framework eco, survey 2014, 4D framework recognition, of bad loans via asset quality review, AQR, disinter, dig up graves, recover money using Sufisi Act, I&B code, Seshact resolution via schemes and mechanisms I&B, project Seshact. Differentiate among PSB, government should recapitalize profit-making PSB, while merge or privatize loss-making PSB. Recapitalization, 4 Basel III norms Indra Hanish, bank recap bonds, and other measures, total greater than 3.5 lakh crore mobilized. Diversify, allow more number and variety of banks. SFB and PYB allowed. Wholesale bank proposed. Reforms, governance and administration of PSB ease deregulate, lower SLR, promote corporate bond markets so they borrow less from banks e.g. triparty repo mechanism. Further, you can also mention PCA norms, PCR registry, PSBN network, ESOP etc. 14.30.8 Writing hand conclusion for public sector banks. A vibrant banking system can support India's growth story. PSBs are growth levers for India. Inefficient PSBs can severely handicap the country's economic development. 35% of Indians are in the 15 to 29 years age group. Majority of them live in rural areas and many of them require education loans and business loans to progress in life. Therefore, aforementioned initiatives are in that regard need to be addressed on priority basis to 1. Reap India's demographic dividend, and 2. To achieve $5 trillion economy status by 2025. 3. To achieve V-shaped recovery post-corona. 14.31 Negative news, ILFS and shadow banking. 14.31.1 NBFC. Shadow banking, S20-1 Chapter 08 on NBFC's financial fragility, observed shadow banking is a set of activities and institutions. They operate partially or fully outside the traditional commercial banking sector. They are not fully regulated by the RBI. They mobilize funds by borrowing from banks, issuing commercial papers, CP, and bonds, non-convertible debentures, Table 5. 3 important segments of the shadow banking system in India. HFC's housing finance companies, e.g. Dewan Housing Finance Limited, DHFL. (2019), some of these LDMFs had invested clients' money in Illinois and FS and DHFL, but failed to get the money back. Nearly 4,000 Indian rupees crore of investors' money is stuck, triggering the NBFC crisis in India. Retail NBFCs retail non-banking financial companies such as gold loan companies, asset finance companies, etc. Shadow banking systems assets are risky and illiquid. If there is a bank run-like situation, depositors of investors demanding the money back, these shadow banks can't honor the obligations. As seen in the ILFS crisis, 2019, 14.31.2, shadow banks Illinois, and FS, and NBFC liquidity crisis. Infrastructure Leasing and Financial Services, Illinois and FS, is a systemically important non-deposit taking non-banking finance company, NBFC NDSI, set up in 1987 HQ at Mumbai. Shareholders, LIC, Japan's Oryx Group, Abu Dhabi's Group, Central Bank of India, SBI. Challenge 1, 2, 3 of above diagram. Plus loans given to unworthy borrowers with forged documents, bribes were paid to Illinois and FS board directors and auditors. 14.31.3 Atmanirbhar, RBI helping NBFCs shadow banks. RBI has launched 1, TLTRO and 2, Special Liquidity Window. Ref 1A2 Monetary Policy. Gov has announced following 1, Partial Credit Guarantee 2, SP Liquidity Scheme 3, Credit Guarantee Enhancement Corporation. 14.31.4 Atmanirbhar Partial Credit Guarantee Scheme, PCGS, 2.0. Budget 2019. If NBFCs, MFCs, microfinance institutions, MFIs, borrowed money by issuing debt securities, bonds or commercial papers, public sector banks, PSB, invested in it, but borrowed default, then the government paid 10% of loss to PSB. Batch, PCB 7. Corona equals total 20% loss cover guaranteed to PSB. 14.31.5 Atmanirbhar Special Liquidity Scheme for NBFC and HFC outdated current. Deleted from handout. Sufficient to know it helps NBFCs. 14.31.6 Shadow Banking Other Remedies by Gov Post ILFS Crisis 1 under Companies Act, Ministry of Corporate Affairs, MCA replaced the Illinois and FS's board members. Uday Kotak made new chairman. 2. MCA constituted the statutory body National Financial Reporting Authority, NFI, under Companies Act 2013 for stricter vigilance over chartered accountants and auditors. More in 1C, SEBI handout. 3. Corporate Affairs Ministry Serious Fraud Investigation Office, SFIO, investigating the Illinois and FS officials and auditors. 4. LIC says will not allow Illinois and FS to collapse, equals we may use policyholders' money to rescue it just like IDBI. 5. 2019. Gov increased blackout pointing double triangle RBI powers under RBI Act to regulate NBFCs in following ways. RBI can remove NBFC's board of directors, can inspect any NBFC or its associated group of companies. RBI can force merger, splitting of non-viable NBFCs, higher fines, penalties for violation. 6. Budget 2019. We will set up a Credit Guarantee Enhancement Corporation to help NBFCs. CGEC. How it'll work. ANS. We'll study when it is actually started. 14.31.7 Shadow Banking Remedies by RBI. RBI tightened norms of asset liability management, ALM, norms for NBFCs. 2019 July, DY. Government Viralacharya Committee RBI Board approved 3-year medium-term framework to improve RBI regulation and supervision based on global best practices equals Utkarsh 2022 roadmap. 3. 2021. RBI proposes 4-tier structure for tighter regulation of NBFCs to be classified into 4 categories: base, middle, upper and top layer, most risky companies. Accordingly, tighter regulation on them. Raised hand exact details not IMP, until they actually implemented. Batch, PCB 7, Mrunal's Economy Pillar 14.31.9, Shadow Banking Remedies suggested by ES20. CEA Subramanian K. has created a health score for NBFCs to monitor given NBFC companies' asset liability management, ALM, problems, balance sheet strength, etc., and gives them a score between -100 to +100. Higher scores indicating higher financial stability of the firm. This health score can provide early warning signals to the financial regulators. They can initiate appropriate measures before it's too late. Black question mark ornament in September 2019, which one of the following travel giants declared itself bankrupt? CDS I 2020, A. Expedia, B. Cox and Kings, C. SOTC, D. ANS, Thomas Cook. 14.32 Negative news, PNB, Lou, Swift, and Nirav Modi. PNB, Mumbai branch give foreign currency loan to our client Nirav Modi for purchase of goods, diamonds, airplanes, whatever. If he doesn't pay, we'll pay. If such bank guarantee given to another bank in a foreign country, it's called letter of undertaking, letter of credit, a letter of comfort. Internal difference not important. Bank earns commission of fees from client for issuing such letters the guarantees. The foreign currency thus loaned goes into PNB's Nostro, Latin, ours, account, and Nirav uses the dollars to buy diamonds in Hong Kong. PNB scam. PNB Mumbai's corrupt manager kept issuing loos to diamond merchants Nirav Modi and Mehul Chowkasi without due diligence or collaterals for 7 years, worth -12,000 crores. And 2018 January, Nirav and Mehul left India. PNB officials couldn't detect scam because loos were generated through Swift platform, which was not integrated with their core banking solution, CBS, server. 14.32.1 Financial Messaging Systems. Swift Russia gets banned. Batch, PCB7, Mrunal's economy. Globally, within India. Society for Worldwide Interbank Financial Telecommunication, SWIFT, Structured Financial Messaging System, SFMS. By a cooperative organization in Belgium's La Hulpe City, 1973. Designed by Tata Consultancy Services, TCS, for IDRBT, equals research arm of RBI, to serve the messaging function for banks, NBFCs, and brokers who may or may not have direct bank relations as settlement systems with each other due to international borders. To serve the messaging function in NEFT, RTGS, and other interbank, intrabank e-transactions platforms within India. Nations banned from SWIFT. 1. Iran, capital Tehran. 2. 2022, Russia got banned after invading Ukraine. This will make it very difficult for the Russian banks, for NBFCs, businessmen, to send and receive money internationally. Afterwards, baseball raised handball by ball commentary on Nirav Modi case equals no timp. 14.33 by dividend, reserves, economic capital framework. RBI's income sources include from its income, RBI allocates funds to 1. Interest on GSEC that are not sold in open market ops. 2. Interest on foreign GSEC sovereign bonds. 3. Interest on loans given to other banks for NBFCs. 4. Revaluation of foreign currency and gold in RBI reserves. 5. Seigniorage, profits from printing money because face value, intrinsic value. How, not imp. 6. Penalties imposed on errant banks. 1. Staff retirement fund, provisions for bad loans, depreciation in assets. 2. Reserves for contingency, emergency ~2.5 LCR. 3. Reserves for exchange rate stability, technically called currency, and gold revaluation reserve, ~7 lakh CR. After making these allocations, profit is shared with Union Gov, in form of dividend, RBI Act Section 47. 14.33.1 RBI's Bimal Jalan Panel, 2018. 2017, RBI Governor Urjit Patel gave 50,000 Indian rupees crore dividend to Gov, but Gov wanted 3.6 Indian rupees lakh crore dividend. Then, RBI set up Bimal Jalan Panel to decide the principles for dividend transfer to Gov. 2019 August, RBI Board approved Bimal Jalan report. It updated norms in such manner that RBI will be able to transfer more dividend surplus to the government. Batch, 14.33.2 RBI's financial accounting year, 2019, Bimal Jalan Panel recommended reform. RBI's central board accepted it before after RBI's financial year. 1934 onwards, January to December. 1940 onwards, July to June. From the 1st of April, 2021, RBI will switch to annual April-March format. But Gov's financial year is April-March, so RBI had to give interim dividend to Gov until RBI's final balance sheet was prepared, then another, full, dividend was given. After this reform, no need for interim dividend. 14.33.3 Section 7 Directive, and Urjit Patel's resignation. Isn't this topic outdated? ANS. Its points need to be understood for GSM-2 regulatory bodies problems. Because earlier UPSC has asked why National Commission for Women a Human Rights Commission not unable to play effective role, etc. 2018, RBI Governor Urjit Patel was unhappy with Gov interfering or criticizing his work. Such as higher dividend, Gov demanded higher dividend from RBI to finance the recapitalization of PSBs for Basel III, and to finance its own fiscal deficit and populist welfare programs. Urjit Patel felt RBI's higher reserves are necessary to check any financial crisis. Excessive dividend could increase inflation. He did not oblige. Basel III relaxation. These norms will become fully effective on the 31st of March, 2019, but PSBs don't have enough capital to comply, so they requested Finance Minister to tell Urjit Patel to extend the deadline. Urjit Patel did not oblige. PCA relaxation. Urjit Patel vigorously implemented prompt corrective action framework, so public sector banks branch expansion, lending operations were restricted. They came running to FM. FM asked Urjit to relax PCA. He did not oblige. Tight money policy. CEA Arvind Subramanian and BJP ministers were criticizing RBI's tight monetary policy depriving MSMEs of cheap loans and thus harming India's growth rate. Whereas Urjit Patel deemed tight policy necessary to keep inflation at 2-6% CPI, all India, on durable basis, so he did not oblige. PNB scam. Jaitley expressed displeasure that RBI couldn't detect PNB Nirav Modi fraud, whereas Urjit Patel defended that he lacks effective powers under Banking Regulation Act to take. Batch. Punitive actions against public sector banks. All these forced Gov to issue Section -7 directive to RBI. 14.33.4 Section 7 of RBI Act Section 7, 1 of the RBI Act empowers the government to consult with RBI Governor in public interest. 7. In 2018 October, For the first time in the history of independent India, Gov began a Section 7(1) consultation with RBI Governor Urjit Patel on the issues of PCA norms, Basel III deadline, higher dividend to Gov, cheap monetary policy, etc. If RBI Governor doesn't positively respond in such Section 7(1) consultation, then Section 7(2) government can issue binding direction or orders to RBI Central Board to implement its wishes. Although, fearing backlash from media and opposition parties, Gov did not issue any specific directions to the RBI board. But 28 in December, Urjit Patel resigned before completing 3-year term. He is not the first RBI governor to resign, and we need not prepare list all the RBI governors who resigned before their term. Black question mark ornament MCQ. Find correct statements about RBI, UPSC Prelims 2021 1. The governor appointed by the central gov. 2. Certain provisions in the Constitution of India give the central government the right to issue directions to the RBI in public interest. 3. The governor draws his power from the RBI Act. Code A, 1 and 2 only B, 2 and 3 only C, 1 and 3 only D, 1, 2 and 3. 14.34 Writing hand mock question 4 mains GSM 3, 250 words each. 1. After 50 years of nationalisation, the public sector banks are lagging behind private sector banks in majority of the performance indicators. Suggest remedies in this regard. 50. 2. Explain the significance of governance reforms in public sector banks, PSBs, for India's economic growth. 3. Suggest the ways in which information technology can be utilised for combating the NPA in Indian economy. 4. What is twin balance sheet syndrome? Enumerate steps taken by RBI to resolve it. 5. While insolvency and bankruptcy code doesn't fully cure the twin balance sheet syndrome, it certainly helps alleviating the pain. Elaborate. Batch. 6. With respect to India's financial stability, explain significance of I, PCA framework, 2, Basel III norms, 3, public credit registry. I2, 3, 3, 7. Why are shadow banks considered to be a threat to the Indian economy? Discuss the reforms undertaken by the authorities to address this challenge. 8. Justify the rationale behind Gov's decision to set up a bad bank, despite the existence of IBC Code and Safisi Act. How will this proposed bad bank alleviate the pain of NPA? Next handout pillar #1C.